Millennials, welcome to another video. This is Sam. Today's video is going to be about investing, what it's all about, why it's important, and how we can get started. And hey, if you're new to this channel or page, just know that it's all about keeping us millennials woke on our finances. Okay, so there's going to be content, actionable, relatable, just for us. And if that interests you, consider subscribing.
So what's investing? When we hear the word investing, we think about rich people with all the money in the world. And so we think it's too risky, too expensive, too complicated. But today I'm going to show you that you're dead wrong in all those areas. Investing is not only for the rich, okay? It's for everybody. Maybe back in the day it was just for the rich, but times have changed and you need to change with it. And if you ask me, investing is trading money for more money. And this is important to understand because this is the secret of the rich, the secret of how to gain wealth. For example, have you ever heard of the cash flow quadrant? Well, it was invented by Robert Kiyosaki, one of my favorite financial authors. And essentially he's saying that almost every way that we get income can be broken down into 4 different groups. Okay. It's E for employees, S for small business owners or self-employed, B for business owners, and I for investors. Okay. And so basically, if I can break those down, employee, as you know, is the normal 9 to 5, 40 hours a week. Okay. So, we bleed, we sweat, and we cry for this money, blood, sweat, and tears, right? And we get paid weekly, bi-weekly, every month for this money. And then we take it home, we pay our bills, we feed our family, and then we go back to work again. All right, so that is E. And also contractors generally fall in this area too. So you may not need necessarily be an employee tax wise, but this still falls in that E category. Next is S, which is small business owner or self-employed. This is the type of person that has their own smaller operation. So maybe a plumber or someone like a veterinarian or dentist that opened a shop in town. Okay, and so these two quadrants, E, which is employee, and S for self-employed, are actually trading time for money. Okay. For example, if you call off of work, then you're not getting paid for that day. All right. Unless you take a vacation day. Same thing for, a small business owner. If a plumber just all of a sudden decides, I'm just going on a vacation for a month, which is awesome, right? That he'd be able to do that. But guess what? He's not making money if he's not working. So for that month, he's not going to get paid. All right. And then the other two, business owner. First, I'll describe the difference between this and small business owner. A business owner is someone that has invested in their corporation enough so that they do not need to be there for the day-to-day operations. So they have managers and supervisors and other executives that are taking care of everything, and they do not need to be there as long. And so the great thing about this is that because you've built this, and so it does start off, trading time in general for money, but then eventually you evolve to trading money for money. You begin investing in your own business so that your business can produce more and more income. Okay. And then the last one is investing. Investing is even less time compared to a business. Okay. So investing is about researching companies and other different things and buying stock or, real estate or whatever the case may be, and knowing that, once the time comes that they'll be getting money back, they'll be getting more money. So again, that's trading money for money as opposed to time for money. So why should you invest? Well, these are some of the main reasons that I know that people invest. The first one is to fire your boss, so to speak. Okay. People that want to invest, or investors, they are working toward not working for anybody else one day. Okay. For us, normal middle class people who have the mindset that this is how you live your life. You get a job out of college, you work 30 plus years, and then you retire. We're missing out. The second one is to build lasting wealth. Okay. And to live comfortably. These people that invest have extra money and they can go on vacation without feeling like, they're going out of their budget and things like that. And again, I said lasting wealth. So when you build, something, when you invest in something that you're building, then that's something that can last over a long period of time. And, it can be passed on through family generation after generation. Okay. And then lastly, and the most obvious one, is to retire comfortably. All right. So nobody wants to work hard all their life and then have, a crappy retirement. But if you invest, you're almost ensuring, well, not necessarily ensuring, but you are on your path to having a great retirement because you have the end in mind. So here's an example of how investing comes in handy. Okay, so let's say right now you and your spouse have expenses around $3,500 a month. Okay, and that includes rent, mortgage, whatever your living situation is, utilities, insurance, all those types of things, right? And essentially, that is how much money that is leaving your bank account every month. So what the rich do, or investors do, is what they do is live their life buying and building investments or assets until that monthly income is greater than their expenses. So let's say, for example, someone has been doing that for 10 years and now they have investments that are worth $4,500 a month. That's how much money it comes in. Well, that means they now have $1,000 of free money. Okay, and what do I mean by free money? That's not like that blood, sweat, and tears money from us working 40 hours or 60 hours as employees and self-employed folk. That's free money. That means their money is now making money for them. All right. And obviously the great thing about this is if they lose their job, they're okay because their assets and their investments are actually paying for their expenses, not their blood, sweat, and tears money. And that's what investing is all about. It's about financial independence. So a few examples of investing includes a 401k, and I still consider that investing because it's free money. Like I said, you are not really doing anything to get that extra money. You're putting in money into your 401k account and your company is giving you extra money. So that's free money. That's not blood, sweat, and tears money. That's why it's investing. Obviously, real estate is another huge one, right? You buy a house, you do have to put that money down, of course, but this is what your mortgage and your insurance is, and then your tenants pay you a certain amount of money, and then that profit is money, okay? And eventually you'll get your down payment back. And if you think about it like an investor, not that, oh, I have a huge mortgage, but that the tenants are paying off the mortgage themselves, all you're thinking is the way I get my money back is actually getting back my down payment. And that's why it's investing, because you put in that down payment, you put in some money, and now you're getting back more money. Next is stocks and bonds. Obviously, people feel like they're very, very risky, but they're still investing because you are buying stock, right? You're buying something, so trading money, and in return, you're hoping that either the share goes up or you're getting dividends. So you're getting more money. That's the type of thing I'm talking about, things that are trading money for money. And what we need to realize, basically the main point of this is to realize that time is the most important resource of all. We can't get it back, and once it's gone for good. So we need to be wise how we spend our time. For example, in the middle class, we trade time for money. If we want more money, then that means we need to trade more time. We need to work overtime or something like that to get more money, okay? And the rich, their time is very, very valuable. So instead of trading more time, they just trade more money. So in general, they trade money for money. And if they want to make more money, then they trade even more money. They just continue to trade money until they have more money. And then they take that money and they keep investing it. So all the money that they make from their assets and investments, they eventually keep rolling it back and buying more assets and investments. All right. And then lastly is how to get started. Okay. A lot of people feel like, I need a lot of money and it's complicated, like we started off this video with, but there are several different things that I've been doing. Not that, I'm super rich or anything, but I have made a little bit of money. Okay. So something I'm not really using because I don't really like it. But if you're scared of, putting your money at risk, there's an application called Acorns. Essentially, if you've had Bank of America, they have a some type of change program where when you spend money, they round your change to the nearest dollar and bring that to your savings account. It's kind of the same thing, except with that change, they're going to be investing it instead. That's what Acorns is about. And all this stuff, obviously, you can just Google, find in the App Store or the Google Play Store. Next one is Betterment. Okay, Betterment is a website that is all about investing money for you. Okay, completely automated. And obviously, you got to put your trust in them. I've already seen some results. So, for example, I would say in the last 8 to 9 months, I realized that I've been putting $50 every single month into this account, right? Every 2 weeks. And so basically, I eventually got close to around $500 in this account. And the last time I checked, I had $535. Okay, which means that I had $35 of free money. I didn't do anything to get my money. That's just investing. That's the way it works. Another one is a lending club. Is basically when you're loaning out money to people that need a loan, essentially. And, they do risk assessment to tell you how risky it is to loan out to certain people and things like that. But, the higher the credit risk, the higher the return. Okay. So eventually people end up getting, about 8% return on investment, which is actually very, very good in comparison to some of these other things. Another one that I just started using is Robinhood. Robinhood is a stock app, but it's different from those bigger companies. So those bigger companies I'm talking about that do like wealth management, which is kind of all about helping you get ready for retirement and stuff, or helping you think about retirement, like Charles Schwab, Scottrade, TD Ameritrade, Edward Jones. They actually charge you a fee for every time you buy or sell a stock. Okay. And it doesn't seem like a big deal, but it does add up, right? Especially when you're young and you're trying out stuff for the first time. You don't want that little change to be taken because that's a big portion of your money at the beginning. Anyway, Robinhood actually is free. They let you trade for free, so you can buy and sell stock for free without a fee, which is amazing. So if you're interested in stocks and kind of want to see what it's like and put up money and not too much money, but obviously not also get charged a fee, then I definitely recommend Robinhood. And so basically, and I'll finish with this. The longer you can consistently invest your money, the bigger and bigger your profits can become. Here's a perfect example. Let's say you're a normal person that has been, investing over time, and, now let's say you're 55 years old, you've been buying stock, while you're working, you've just been buying and buying, and now you have $1 million worth of stock. Okay. If all those stock altogether get on average around 5% return, that means that year you made $50,000. And that's not money that you worked for. That's not blood, sweat, and tears, 40 hours a week to 60 hours a week money. You worked literally 0 hours to get $50,000. And guess what? That's what they buy that new Benz with. Okay. That's what they buy that new boat with. Not their $40 or 40 hours a week money. Their asset producing income, or their profits from their assets. Okay, so that's basically about it for this video. Again, if you're interested, definitely subscribe to my YouTube channel or like my Facebook page, Woke Millennials, and I hope to see you in the next one. Stay woke, millennials.